Welcome back to Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange. It's time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist, BullseyeOption.com. Good to see you both. Alan, not at the CBOE, somewhere else. Very cool. All right, Alan, what's the deal? What are you thinking about the market?
Well, I love your last guess. Put Frank on every time before me. I appreciate his thoughts in the fact that he focuses on price, not how he feels about the markets. And that's what you have to do. And the markets are telling us some very positive things. The VIX at 16. I mean, that's amazing. And
all right, Alan at the airport breaking up. Let's get to Ben Lichtenstein. Before we get to Devon Energy, just your big picture, Ben, on the S&P 500.
Nicole, for a while I've been saying as long as we hold below 4,300, above 35, we're in an extremely wide range where there's an enormous amount of opportunity, but we're not seeing anywhere near the amount of conviction that we saw since the beginning of the year and the sell side activity into the October lows from last year around 3,500. So we're inching our way back up to that 4,300 level, nearing 42, but still a ways to go for the bulls before they can claim a victory.
Yeah, without a doubt. I mean, the theme has been some downside action. I mean, at least in some cases. What I did see is that the Dow is coming off the third negative day in force. So he's talked about some downside action. But in the bigger picture, it looks pretty good, right? The Dow's trying for the fifth week in a row higher. The S&P trying for the fifth positive week in six. Alan, let's get to Devon Energy. You had some thoughts there.
well, yeah, oil's well, and it's well for the producers, obviously, not the consumers. If you notice, we saw oil make new lows for the year recently, but it didn't make new lows at the pump. So somebody's making money. You're also seeing a bullish divergence bottom in oil itself and in this Devon Energy stock. It's been trading between 45 and 55. So this bottom base here that targets 65 on a breakout, and we were there in January. There's a gap at 60 to be filled. So this stock is 30% off its 2022 highs. And it's also got, like I said, that bullish divergence is when I find that bottom in place, because there's the sellers running out of strength, and it's making a bottom base with new price lows, but not new highs in volatility.
All right. Ben, what are your thoughts on Devon Energy?
Well, I'm looking at a stock that's starting to roll over after trending higher on a more intermediate time frame and on the longer term time frame. Well, we'll get into that in just a second, but let me show you what's going on here from 44 up to recently 56. But look at how we're losing some of that momentum and possibly rolling over here. Let me show you what I've got my eye on in terms of these areas of consolidation and how this really just disappointed the bulls. We always talk about as you form a new area, you can establish the trend, right? The movement of value. In this case, it's been well defined at the upside, and you're constantly referencing the prior area while you're forming the current area. So while we were balancing last week into this week around 56, we were expecting another breakout to the upside, a new area to form at a higher level. Well, look, the exact opposite's happened. We've taken out 55. We're invalidating the working assumption that we're trending higher on the hourly time frame, and this sort of feeds into this longer-term trend as well. So potentially rolling over here at a key level, not only rolling over here, but after a recent test and failing at the March highs. Look, from 79 down to 44. And as I look at this chart, I see two things. We're in a situation where we were establishing value to the downside, retested this 55 level, which was significant, unable to take that out. Again, rolling over at a key area of resistance. So I sort of pulled out the fat crayon on this one. 50 is going to be the pivot level right now on this area, but this range that we've been in since February, taking a look at where we are relative to the 50 and 200-day moving average. I've got it here for you. 1 second on Devon. Well, I'll pull it up for you in a second, but basically a stock that's been trending lower, and we're seeing a bit of a counter trend move, but it might be dying out in terms of energy.
No, I think it was great. You showed us the shorter version and then the big fat long version and these key levels to watch, right? Alan, final thoughts on Devon?
Well, the key again is how to play. It's an option play here, and I'm looking at the August option that has 4 months of time, and in the money call, the 45 call gives you the right to be long at the low. That's trading for about $10.50. It's only 50 cents more expensive than the July options for an extra month of time, and it's $8.50 in the money. So it's got an 80 delta. It's going to act like the stock. Now, if we just get to that modest 60 level, then this option gains 100%. Like Ben said, this 50 level is an important level to lean on, where it had been trading between this 45 and 55 for a month. So you're buying this dip here and looking to see if it can hold the midpoint of this bottom base range.
All right, next, the ARK ETF. People loved it, then they love to hate it, then they love it again, right, Alan? Tell me about this one.
Everything is about risk reward. I don't love anything. I don't hate anything. I trade anything. Right. And the way this is set up is that finally it's had enough consolidation to offer opportunity. So we've been seeing it trade between 30 and 50 here. And what's also important is that you've seen the excitement tamper down, and the fact that the volatility now is only is half of what it used to be. So the options are cheaper than they used to be. It's 75% off its 2021 top. So this 40 range is very important because it's the midpoint of this range, and it's consolidating around here. Now a breakout, I'm gonna say it before Ben does, not yet, but a breakout sends it right back up to the 50 range top. So the way I'm looking to play again, an in-the-money option, a 34 call for September, 5 months, trading for about 7. And if we get to that 50 level, which is the range top, that option gains 100%.
Look, you know, a lot of people were really excited, particularly when it sold off and everybody started doubling down. And but over 1 year, it's still down about 35%. This year, it's up 20%. But if you look at a name like NVIDIA, that's up 80%. So it's so hard to gauge how well ARK should be doing. But you're looking at price specifically. I mean, a name like Tesla, which is heavily weighted in there, is up 34%. So it's underperforming Tesla. I'm sure Tesla's weighing on it today. Ben, take a look at the ARK ETF for us. What are your thoughts on the chart?
I did, Nicole, and identified 2 key areas, and Alan just pointed to them, 40 and 50. They're both important. 40 in terms of the more intermediate time frame because, well, we rallied up. As Alan pointed out, we've kind of lost some of that momentum. From 45 was the spike high, back down to 35. And, I mean, pretty simple to do the math in terms of looking for a pivot as far as that range, right? It is the $40 level that Alan just mentioned. And you can see, again, a very similar pattern and a bit more of a shortened time frame. We balanced in the beginning of the year around 30, broke up again to 45, losing momentum sideways and consolidating. A big area right now that the bulls are going to want to keep an eye on. And at this point, you can see we're holding below that, which opens up a door potentially for a retest of 35. Alan mentioned the $50 level, and he talked about it being the upper extreme of the range that we've been in. This goes all the way back to this time last year, May of 2022. But I really focused on that longer-term trend to the downside. So the bears are expecting that to continue now. Tough to bet on this one going down to 0, but there's some still range potentially to the downside here, as you see again the trend which has been continuing to play out. So I can understand what Alan's talking about in terms of potential for upside momentum here, but I think first we need to reject these lower levels, and we have yet to do that until we get up above 67. Now, the first flag to fly in terms of the bearish narrative here would be the $50 level. That's the upper extreme of this range. But here you can see still holding below 40. That's the pivot we just talked about. And sure of it this time, Nicole, I've got the right chart here for you. Look, you can see holding below the 50, holding below the 200-day moving average. So that's, again, somewhat of a pivotal area to keep an eye on. Look at RSI. Not really a lean one way or the other, but this ETF here we're talking about up 20% year to date. We know just a few names have really sparked this rally to the upside. We'll see if they can continue that momentum and if earnings can support what we've seen recently in terms of taking out the Feb highs.
And when you've seen, you know, look, it's come up off the lows, as you noted. You know, there's just still jitters overall. It's just hard to be 2 feet into some of these things at this point. Alan, your final thoughts here on ARK?
Well, and that's why I use limited risk in the money options. It's like being long from a lower level, and you've got time to be right. Now, Ben said it's probably not going to go to 0. I appreciate that fact. And he also said that he would be liking it if it had got to 67. Now, at 50, my option's going to double in value. So I'll be long gone. This is a risk-reward trade. And it's also about the psychological sentiment that we can measure when you see that bullish divergence, meaning that it's bad enough to buy because the short sellers at some point have run out of strength. And that's the play on that one.
All right. Last but not least, what's going on with these banks? Banks last week, banks this week, after all that went on with the regional banks. I mean, do you have a big picture thought before you get to Fifth Third, and then tell us about Fifth Third?
No, I don't think. We've had this discussion before. I try not to think.
So look at the price.
I look at the price. Now, Fifth Third is a stock that I liked, and I was waiting for the earnings to happen, which happened this morning. So they were looking for 78 cents. They were looking for 79 cents. I got 78 cents. So again, that's thinking. So it missed by a tiny bit, but it pulled back. But what I really liked was the technical setup. And so this stock's trading around 28 right now. We've been between 22 and 38. So at 30 midpoint, and there's a gap up above at 30 as well. So in my mind, we had one bad bank, okay, that was poorly managed and deserved to go out of business. The rest was a lot of concern. But you can measure that concern by looking at volatility. And the volatility has decreased in the banks. And if you look at this, the PE on this bank is 8. And if you run a bank properly, it's not hard. You give people interest on their money at a real low rate, but you make a lot of interest on it, with short-term treasuries. So it's not a hard equation. You're printing money, essentially. So I'm looking at this leverage buying and accumulation at this bottom base that somebody's finding some value. And again, it's almost 50% off the 2022 high. So again, it's a value play. It's a rather inexpensive stock. And I'm liking what I'm seeing technically, where we're trading here sideways and attempting to break out to the upside once again.
All right. Thank you for that. So bullish there. What do you think, Ben, when you take a look at the charts?
I think there's another stock that's been trending lower on multiple time frames and not rejecting these areas as of yet, as if anything, it's testing an upper extreme, which I think the bears could see as a sell opportunity. Let's get into, first and foremost, a more intermediate 4-hour time frame. Two very well-defined areas of consolidation. You can see that stress that Alan was just speaking to in terms of the selling that we saw and the bank crisis down to 22. But yeah, not a lot of follow-through at this point. But consolidation, as mentioned, we're kind of testing the upper extreme of that range here right now around the 28 level. But a big elevator shaft, right? There was energy, there was conviction to the downside here. So that's going to take some significant reversal type tendencies to retrace that. Now let's step away from the 4-hour time frame because I want to show you this move from 38.20 to 22.11. Well, just part of the bigger picture move we've seen since the beginning of last year. We were trading up around 51. You can see again this pretty well-defined trend, top left, bottom right. And I hear what Alan's talking about in terms of buying these stocks because things have been a little bit overdone, which I can understand. And Alan, that doesn't concern me too much, even though we still see a trend to the downside here. As long as we're below 35, I don't see necessarily upside momentum at this point. What would concern me is if Alan was starting to buy these stocks and then go to the airport, for example, like an S&P O'Hare spread. So if we see Alan, well, wait a minute. Hold on a second. But still in this environment, we're trending lower here at this point. But moving away from that, I want to show you where things stand in terms of the 50-day, the 200-day, because that elevator shaft that we fell in, look, brought us well away from that. We're talking about a breakdown below. And again, just kind of this trend environment lower, which we still have yet to reject, only testing the upper extreme of the value area we've been forming since that initial selling.
All right. What did you think of that, Alan? Final thought.
Well, I got a lot to say to that, but that's called the Rio trade. And actually, I'm halfway there. I'm in Miami. And risk management doesn't let you do that trade anymore, unfortunately. So I'm looking at this this first third bank. And there's a gap at 30. So if we get back to that 30 level, it's going to be a gap and go because obviously this was a contagion play. If you look at it, like I said, banks are cheap. The PE is 8. And if they run their business properly, which is not that hard to do, they make lots and lots of money. Look at the profits that we've seen in some of the big boys. We're talking 8 billion, 12 billion. These guys just made $500 million and they're just a little back. So the way to play is an August 25 call, which is an in the money option trade for about 4. It's got 4 months of time. It's $3 in the money. So, it's going to act like the stock, and it's a much better way to play and be positioned for this stock to recover when people come back to their senses that banks are printing money.
Thank you. Thank you both so much. And Alan, we truly appreciate your dedication. Thank you for being on the show today. I know sometimes it's not easy, and I'd like to acknowledge that you made an extra effort for us today. Really, you're a man. That's super. And Ben always doing great on those charts. Thank you both. so very much. Good to see you both. Alan Nuckman and Ben Lichtenstein for the big three, right? You don't want to miss it every week. Coming up next,